As we're waiting for everyone to come in, today is the first day of the IG Live Path to Homeownership. Hi, Sylvia.
How are you? It's so nice to see you.
So good to see you. Thank you again for joining and saying yes. I'm so excited that we get to do this today. I really want to jump in, but I want to give people some time to jump in. We've already got 5 people here, which is great, or 8 people here, which is
Eight,
great.
nine, 10. I'm super excited to talk about this. So for those of you that are still waiting, Tiffany and I, have been talking for about a week or two, and I'm like, oh my God, I love this girl. We got to do a lot. So I'm so grateful that you reached out because I haven't done a live in a while. So I'm excited to talk about home ownership and now is an awesome time and because interest rates are really starting to come down, so we're it's at a really exciting time to be
Yes.
buying. You want to be buying when nobody else. So
Exactly. You want to avoid all this competition that I'm sure is going to really start to ramp up as the spring and the winter starts to give, a little bit more leeway with some of this stuff. So I'm logging in here so I can also check in on the chat on my other phone. So I got that all together. So I want to get started because this is such an important topic, I believe, in terms of helping people understand, what your options are with home buying. A lot of times, you don't know what you don't know. And so these kinds of talks, I think, are really going to be important for people who maybe don't even know what to ask, don't know where to start. And so I think for me, starting with a financial planner, someone who understands finances and how to get you to the goals that you may have set for yourself is really important.
so you know what? I have my tripod. I'm just gonna put my tripod on. So give me
Yeah,
just
take
a
your
second.
time.
I was
Take your
trying to.
time.
Uh, Sorry about that. Give me
It's
just a
okay. Take
second.
your time. This will give us some
I had
time.
it up, but then I was like, I feel like we'll have a nicer, like, little setup, but
Yeah, no, this is great.
perfect.
First and foremost, so everyone, welcome to the Path to Homeownership, a live Instagram series where this week I will be talking to industry experts on the path to homeownership and how to get there yourself. So today, I really want us to understand, the fact that home buying isn't just about finding a property. It's not about just finding your dream home, but it's about understanding the process and having the right people explain it to you. So that's why we're going live here today, and we're going to have industry experts that really break down the path to home ownership. No gatekeeping, no confusion, no uncertainty, just clarity. And so today I'm joined with Silvia Manent of Manent Capital. And Sylvia, do you want to just start us off by kind of giving us a little bit about who you are, your credentials, what you do, and why you do it?
Oh, thank you. I was like ready to log into all the awesome questions. So, my name is Sylvia. I'm a certified financial planner and a CFA charter holder. And now I'm almost going to be a tax certified tax advisor or something like that. I forget what it's
Nice.
called. So, it's really cool because I combine all the three, right? Investments, financial planning, and tax planning to really allow my clients to basically do more with even less. So I've had my own business for 6 years, but I've been in this industry for 15 years. I started at Credit Suisse in Switzerland. And so I learned all of the ultra high net worth strategies, and I've really just brought them over to normal people. And when I say normal people, even people that are starting out and really looking to grow and buy their home and grow their wealth. So.
I love that. So I know a lot of people are probably wondering, but what is the biggest financial mistake that people make before they even talk to a lender?
Oh, biggest mistake is buying a really nice bougie car before they even talk to a lender. So here's what's really interesting is that a $500 to $700 a month payment, which nowadays I feel like it's very common to see $700 a month. Back in the day it wasn't, can literally reduce your buying power from 50,000 to 100,000. So
Whoa.
that little car that you just bought, maybe you're like, oh, it's not that expensive. It's because you can't buy a car for less than $40,000 nowadays.
Right.
It can really ruin your ability to get more home. Obviously,
Mm,
depending on the interest rates, but a $500 a month payment can easily reduce your buying power from fifty to $100,000. So you want
wow.
to avoid buying really large items prior to owning a home. Buy the
Okay.
G-Wagon after you buy your house.
I mean, and that's honestly a really good thing because I think some people think, well, this is a necessity. I need a car to get to work. I need a car to do XYZ. So doesn't this make sense, for me to have a car? But like you said, having that any exposable income that you do have going to a large car payment is really going to kind of hinder some of your buying power. So that's really good advice. How much money do you actually need to save to buy a home, and what surprises people the most?
So number one, you don't need a 20% down payment. You don't need it. Now, with a 20 to 40% down payment, are you going to get most likely a better interest rate? Because when you're competing with loans, yes, absolutely. I'm seeing this all the time with a lot of my clients where
Okay.
they're able to get 5.2% interest rates when most people are getting 6.5, simply
Wow.
because they're putting 40% down, right? So the
Okay.
conventional 20% down, you don't need it. You can go as low as 3.5 to 5%. The problem is that a lot of people, and this kind of goes into one of the questions that you had previously asked me, is that they will save for the down payment and the mortgage and interest payment and maybe property taxes if they're working with a financial advisor, but they completely forget all these other costs like closing costs and repairs
Mm,
and maintenance and things like that. So what I would actually advise people is you don't need 20% down. You can go as little as 3.5%, especially if it's your first home. However, just realize that you're probably going to get a better interest rate if you save more money. And I'm seeing it
mm.
with a couple clients where they're getting 5% interest rates right now with 40% down. But
Wow.
I like
So
to,
basically, if you want to drive down the rate, you put a lot more down so that you can be able to afford it more. But I was going to ask that in the chat for people who have bought a home, how much you put down, and I see someone put 5% down. Okay, so that's not bad, right?
I'd love to hear your interest rate, by the way, and then when you bought it, right? Because if you bought it in
Yeah.
2011, you probably have an awesome interest rate. If you bought it now, it's probably, but the good thing is that, we can refinance all the time. Oh, that's great. So, yeah.
Yeah.
So if you can get a good interest rate, like back in 2021 when everybody was getting awesome rates, you don't have to put 40% down. It's just that, interest rates have been higher for longer than we thought. And
Hmm.
so you have to make it a little bit more affordable, and banks want to reduce the risk of a
Mm.
lender. So that's why some of them are asking for a little bit there.
Okay.
Yeah.
And someone else just said I put down 15,000. Yeah, that's not bad. I mean, I feel like I remember when I purchased my first rental property and I put down about 28,000. And I probably shouldn't have put down that much, but I didn't have the proper guidance. And I learned so much just from that one transaction that really is the reason why I ended up being a realtor in the first place, because I'm like, I got to know this stuff for myself. I got to be able to really navigate this because there's so much to know. So that's good to know that you don't have to put down a large amount to get started or to potentially buy a home. Do
I'm
you
going to
do you
say
think?
something too.
Yeah.
I wanted to add, sorry, I didn't mean to interrupt. Go
No, go
ahead.
ahead. No, no, no,
It
go ahead.
goes down. So the ultra wealthy actually put 0% down. And here's how they do it. And you're probably like, how the heck do they allow that?
Yeah.
Instead, so traditional people, right? Like normal people, you go to the
Yeah.
bank and you're like, here's my house, give me a mortgage against the house. Really, really
Mm,
ultra wealthy people, not even ultra wealthy, just people that know the game, they're like, wow, I own a stock portfolio. What I'm gonna do is, and I've done this with our clients, where I want to buy a house. So instead of like selling my investments, paying capital gains, we do what
right.
is called a securities, and we borrow against their portfolio. So let's just say, for
Mm,
example, you have a $1 million investment portfolio, just as an example, right? And you're a financial advisor and you're investing and the market's growing and you're like, yay. So what you can do is you can borrow about 700. So if you have $1 million, you can borrow roughly $700,000 of that
wow.
as kind of like a line of credit. And if you're gonna buy a home now, depending on where you live, if you can literally borrow against how 100% of that money and put it as a cash payment. So
Mm,
really wealthy people will do is they're like, when they're putting offers on a house, they're like, okay, I'm going to put $6 million in cash. They're not taking it out of their investments. They're borrowing against their assets, their money,
Wow.
and
Okay.
they're borrowing, like they're putting 0% down of their own money. So this is a really cool strategy that we've done a lot. It's a little bit more sophisticated and you need to have a higher investment portfolio, but
Right.
it just allows you to just see all the possibilities. And this is actually one of my favorite ones, and you can use it to buy your own car as well.
Wow.
That one.
That's interesting. So I guess in this instance, it would really be for people who have already kind of set themselves up with a investment portfolio that they could pull from. Would this be the same if you had like an IRA or yeah, IRA or like a
401k.
401k or something like that?
So, and with an IRA, you can't borrow against an individual retirement account. You
Okay.
can borrow against a 401k. Now, the Trump administration is looking into to see if you can borrow way more than like 50,000 or the
Okay.
lesser balance. And so 50,000, you can't really buy a home with $50,000 anymore,
Yeah.
unfortunately. But the Trump administration is looking into seeing if people could actually cash out more of their 401k for a home ownership.
Okay.
Now, a lot of banks don't want that because they make a lot more money with you
Right.
borrowing from them.
Right.
But so you want to have it in just a what is called a taxable brokerage account, just a regular, flexible, like savings account that maybe you have a financial advisor and they're getting it invested or you're investing it yourself. And what you want to ask for is a line of credit. So
Okay.
you basically, instead of using a house as like a collateral, you're using your stock portfolio as collateral,
Wow.
and you do that. So we've done that with a couple clients where they just wanted to win a bid, and they knew
Mm.
that if they did a cash offer, they would get a better rate,
Right away.
or
Yeah.
they would just get the house, right? So they would get the house.
Yeah.
And it's an awesome strategy where you're staying like you're doing something in cash, but you're actually borrowing from the
Wow.
bank.
See, you guys, these are the tips and tricks that you need, which is why you need Sylvia in your life. So if you are not already following her, make sure that you are doing so. She's giving so many good gems on a daily basis. And if you need help with your finances, I highly recommend tapping in with her. So, next question: is it smarter to pay off debt first or save for a down payment?
So this is a math question. And it's two things. It's a math question, it's also a debt to income ratio. So a lot of times lenders, what they're gonna look for is they're gonna give you a better interest rate the less debt you have, right? Because
Okay.
debt in their eyes, if you have a lot of credit card debt, student loans, you can actually get a mortgage, but you're going to be seen as a riskier person to the bank. And the
Okay.
riskier you are to the bank, the higher the interest rate they're going to give you, right? So
Hmm.
technically, the lesser the debt that you have, the better from an
Okay.
interest rate perspective. However, my thought is always looking at the math, right? So, for example, if there was one of you ladies out there, you bought a house in 2020, interest rate is 3%, amazing, right?
Right.
That is interest and that's debt that you don't want to be paying off. It's free money, 3%.
Hmm.
That's nothing.
Yeah.
And so that kind of money, that kind of debt is healthy. It's good. However, with credit card debt, those are 25, 30%. That's not good because it just destroys your ability to really build wealth. When you're
Okay.
going to a mortgage officer, they're going to be like, "Oh, this is too much credit card debt. You clearly, we have a little bit of a problem here, so we're going to have you pay more." But it really I usually recommend that I'm going to use the $1 million example just because it's easy to see. But
Yeah,
if you
with the
have a
numbers.
million
Mhm.
dollars, don't have more than 300 to $400,000 of debt. So don't have more than like 30 to 40% of your total net worth in debt, because after 30 to 40%, that's too risky.
Mm. Now, I've seen this, and this is a little off of the guild here, but I've seen people talk about, those programs like Affirm and Pay After and Klarna and stuff like that.
Klarna, yep.
Do those hinder you? Do Are they looked at as the same as having credit card debt?
So that's a great actually question. I'm not 100% of that, but I have heard some rumors where people are like, you can take this out because it's not impacted by your credit score. Now, you can't, I'm not actually sure.
Yeah.
However, the problem with those, because they don't actually show up on your credit score, my
Okay.
understanding is that the problem with that, Klarna and Affinity and Afterpay or whatever you want to call them is
Yeah.
they're kind of they're praying you're typically buying clothes or Sephora's things. You're not typically it's typically like
Consumerism.
consumerism, right? So, and then it gets lost. So I don't recommend those. I call them like you can't. It's like buy now, pay later. I call it buy now, pay never because you couldn't afford it to
Mm.
begin with, right?
Wow.
So
Yeah.
it
Yeah.
becomes an issue. So I don't recommend that, but I'm not 100% sure of the impact. But I know that they have been talks that they might want to show in the credit report. So.
Okay. Okay, that's good to know because I know those are like really popular now with like you said with clothing and stuff. When the new season comes, you want to buy a bunch of stuff. You're like, oh, I'll just put it on there and I'll pay it over time, not knowing that it could potentially be harming you. So, how does buying a home impact your long-term wealth compared to renting? I know this is a big one that most people are like, oh, I'll just rent, I'll just rent. But overall, how does that end up impacting your wealth?
So this is a great question. So typically, when you're doing an analysis of like rent versus buy, a lot of homes, right, that you're renting. For example, I'll give the Boston area because every single market is going to be very different. Now, in the Boston area, if I'm looking at two separate condos and I'm looking at the monthly payment of a condo that I want, maybe I'm paying 3,700 a month for the rent, and if I buy the condo, I'm going to be paying about 6,500, right? So
Okay.
clearly the condo is costing me more money monthly. Now, so here's where it gets a little tricky, right? Because if you have a financial advisor, and if you have, or you're an extremely diligent saver, in some market, it actually may make sense to rent. However, the data shows that a homeowner is 40 times higher, has a 40 times higher net worth than someone who's renting.
Yeah.
Because the renter is not that difference, right? The $3,700 payment versus the $6,500 payment. They're actually not saving that or investing that in an investment account. They're
It's
spending
just
it.
going away. Yeah.
And so for me, right, I think a lot of people, and this is most people, need a home as a forced savings rate, as a
Okay.
forced savings mechanism. Very few people are very good at actually saving the difference. Now, I have a couple clients that are amazing and they've done really, really well, but they still want a home because a home they want to nest, they want to build a family, they want to paint the walls, they want to be able to put their own furniture and
Right.
like touch. But so the math can actually work in a renter's favor. The problem is most people don't save that money.
Right.
So, but for example, there's some markets where Texas or St. Louis or where it actually makes sense to buy, especially because I mean you're 40 times more likely to have a higher net worth.
Which is
It's how
huge. I hope people don't get lost on that. 40 times more
40
is
times more.
huge. That's
It is a
huge.
huge, because most Americans, unfortunately, a lot of people don't have that education where they're being very, very good with. I'll give you an example. So, my husband is very bad with money, and he needed a big house to like force himself
Yeah.
into investments. And so I always tell him, I'm like, you could have rented the home, but then I see people, I realize that 90% of like our population is like him. So we're
Yeah.
like, buy a home because,
But I love
but
the way that you said it, that it's a way to force you to save.
yeah.
If you're not already good at being someone who saves money, and if you have expendable funds, you're more than likely going to spend it, then maybe having a larger, payment monthly to where you're actually saving towards your future is a better thing than just wasting the money kind of renting, hoping that the money that you save, you'll actually put to good use.
And we have a housing shortage, not only in the United States, but I work with a lot of international clients. This is happening globally, where there
Wow.
is just not enough housing. And lowering interest rates, the way the Trump administration is saying that they want to make housing affordable, is just going to make things even worse. Because what's going to
Mm.
happen is you're going to lower interest rates. And so now you're going to have way more people competing for the same house, right? The only
Right.
way to fix this issue that we have.
Oh, wait. I think it's still, it
Housing.
hasn't. There we go. We just got you back.
Oh,
We just
okay.
got you back. Okay.
Sorry, it's like I keep getting phone calls sometimes. So the only way to fix this housing problem is to build more. And the
Mm.
only way to build more is to incentivize
The
developers
bill,
to build
yes.
more.
With tax
Um,
subsidies, right?
exactly.
To make
So
sure that the money they're spending to build these, they'll actually be able to recoup the money by, putting them at the right price. Oh, yeah. You're right. Yeah.
exactly. And so yeah, so 100%. And I'm seeing this a lot where if you really want a house, you want to you want to budget. And I think that was one of your next questions. So I'm
Yeah,
happy.
yeah, yeah. No, no, no. This is great. In terms of, because we're still kind of on the topic of credit, because I know some people say, well, what is the credit score that I need to even be approved? So, what would you say is the credit score range that people should realistically aim for? Obviously, not perfection, but just so that they can actually even just get approved.
Yeah. So it's typically you can get the sweet spot is roughly the perfect, like the sweet spot is 720 or higher. However, you can
Okay.
absolutely get a mortgage with like a 650 credit score. Lower than that, it's going to be tough.
Okay.
But if you're trying to really aim for the best interest rate, you don't have to have like an 800 credit score. With
Right.
anything like 720 is totally fine. Just keep in mind not to be buying a G-Wagon or these expensive cars before, because that will also impact your ability to get credit.
Right. Everyone's like, buy a G-Wagon. You can put it off your tax, take it off your
I
taxes
know, I
then.
love G-Wagons. I love it. I love them. I love them. But after you make your money,
Right, right,
right?
exactly. Not while you're in the middle of it. So, how far in advance should someone should be like financially preparing to buy a home? Is there a certain time frame that works, or is it just dependent?
Ideally, from the day they're born. I'm just kidding. So ideally, about a
Especially
year.
if you live in America.
I know, right? The day you're born. But it's happening globally. Like I'm from
Mm,
Spain. We're seeing housing shortages. It's happening
wow.
everywhere, everywhere.
Okay.
So there's a couple of things that you can do, right? We have a housing shortage. Home prices for all of us are expensive. A lot of you're seeing a lot of migration. So I think
Mm,
look, if you plan for 1 year, you get an idea. You either do a financial plan, figure out how much you can comfortably afford, because a lot of times lenders will give you more money than you can, and because nowadays mortgage and interest is roughly 50% or less of your total payment, right? Property taxes, insurance, and maintenance
right.
costs are more than 50% of your payment. You want to make sure that you have that cash flow and that you have the budget for it. So typically I like to advise people about a year in advance. Don't come after me like 3 months and low, Sylvia, go. You're like,
Ready, go.
it,
We're ready.
and then it's good. Like I would say, plan a year in advance. And if you have a financial planner, tell them a year in advance. Please do not. I literally had a client buy a $3 million home, and then I was like, whoa, 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 we cannot afford that. Like,
Yeah.
you know what?
They're like, but I
So
but I got it already.
I know, and I was like, dear. Long
Oh
story short,
no.
2 years later, she got foreclosed on the home. So it was very
Wow.
sad. It
So
was
it
very
really does
sad because
matter. It really does matter
it
to,
doesn't
because
matter
just
because
because you may have the money up front, like long term, if you're not setting yourself up financially to be able to cover that cost, you can end up losing what you so desperately wanted.
exactly, exactly. And it's
Yeah.
something where, and this is a common mistake I see a lot of people where, especially with business owners, where they'll have a really, we saw this in 2021 and 2022 when everybody was making money online and people were making $1 to $2 million a year, thinking that would be sustainable, and it wasn't. We're seeing a lot of,
Mm,
unfortunately, people closing down their businesses because it just wasn't sustainable. And so when you buy a home, judging from 1 year of a great year, you're gonna have issues. And so unfortunately she was foreclosed and had to move back home with her parents.
Wow.
Yeah.
Well, we don't want that happening
We
to
don't want
anyone
that
watching live. This is
happening.
why you need to, at whatever point you may be watching this, take down some notes. And like I said, follow Sylvia. You won't regret it. I promise you. So, how do lifestyle choices such as like travel, subscriptions, we already kind of talked about car payments, but how does that impact your buying power? Because I know we already talked about the car payments, but I know now, travel life, IG will make you feel like if you're not traveling every quarter, you're not really living. So how do, especially with millennials, so how do we manage, wanting to experience life, but still put ourselves in a good position to be able to purchase a home?
Exactly. So it's great. And I think you can absolutely have both, but I think you need to be realistic, right? So if travel, I'm a big travel. For me, that's the number one thing that's most important to me. And when we bought our home, with my husband, I was like, I want to be able to travel like every month. I'm like,
Yeah.
and so it's like, okay, I totally think that people should keep traveling because you're only going to, it's one of the best educations you can get. You're going to
Mm,
learn so much about yourself. You're going to see the world. I think it's great for kids. So I think I do applaud people keep traveling and keep doing it. But basically, it's going to mean that you're going to might need a smaller home, or
mhm.
you're going to need to move a little bit further north. So one of the things that we actually did was I had lived in Boston, and my mom was always like, you gotta live in Boston. I'm like, Mom, you want to buy me a $9 million home?
Ooh,
Okay.
right, right.
But it's like, okay, if I want to have the same lifestyle with a really beautiful home, I actually went up north, and I actually, one of the things that I think would be really valuable is to look at different cities and different towns that you've
Okay.
never even heard of. Because the
Mm,
town, we literally, I just as an example, right? Where we live, it's actually a very affluent community, where you're seeing a lot of like really ultra high net worth people moving to this new area in New Hampshire. I personally had never heard of it because I was just like Boston, Boston, Boston. And so when my husband and I found this home that we loved, we started like looking at the area, and we realized that the town we had landed on, because there's only like a population of 900 people, nobody had ever heard of it. Like nobody had been looking at this beautiful home that we bought.
wow.
And so we were able to literally buy, I always, as an example, like we were able to buy a $6 to $7 million home for $2 million, simply because we expanded
Wow.
the town, right?
Yeah.
So remember, like we expanded ourselves and we looked beyond the typical like keeping up with the Jonases,
Right.
things like that. So I would say keep traveling, but if that's something that's very important to you, be open-minded about where you live, and really, as long as it's a safe community, nice people, good schools, you might actually end up realizing that because there's such a shortage of homes, everything is going to be up and coming, and you might actually be able to position yourself in the next boom of town.
Right.
So that's
I
what
love
I would say.
that. Yeah, and I think about subscriptions because I know they have all these different tools where you can kind of find out about subscriptions that maybe you forgot about, or even just seeing sometimes the list of subscriptions that you have and what's really coming out monthly. I remember one time I was doing just an expense sheet and I noticed I literally had about $350 worth of subscriptions coming out every month. And I'm like, that's almost a car note.
Yeah.
Like what is going on, And there were like just subscriptions that, maybe you do a first time trial and you think you went back and canceled it, but then it's like still hitting you monthly. It was some things like that. Are there any tools that you know of outside of like that could potentially help people really pin down some of those subscriptions and get them in a better track so they can save money?
Yeah, so I love the app You Need a Budget. It's an awesome app. I love it for cash flowing. One of the things that I also love to do, to be honest, is to download a credit card statement. And this is only because you don't want to do this with ChatGPT, especially the free version, because it will use your data, it will train Yep, you need a budget. It will train on your data. However, there are some like AI tools like Gemini or even Microsoft where if you're a paid subscriber to them, they're not using your data to train and they keep it confidential. So you want to really make
Wow.
sure. But I've even done that with uploading my own credit card statement into Gemini and being like, can you find any weird things that I may
Yeah.
not be able to wear? And it's
That's a good
good.
idea. That is a great idea.
So I
I
use
know.
Gemini instead of
Okay.
ChatGPT because I'm on the Google plan where they keep my data and my everyone's data, private, and I can, they literally show me like your data is not used to train your data like in every single
Good.
chat. So makes me feel better than using like a ChatGPT.
Hmm.
But that's a pretty much less easy and less expensive way to look for subscriptions.
I love that. So, want to get into some myth busting. Um, is buying a home still worth it in today's prices and the interest rates, do you think?
So number one, there is a saying, "Marry the home, date the rate." I don't know if you've ever heard of
Yes, I've
it.
heard that. Yes.
So I think it's a little bit. So I do agree with it. However, I think it's a problem because a lot of people 2 years ago they kept saying that for the past 2 years. Buy the home, marry the rate. Buy the home. I mean, sorry, yeah, marry the home, date the rate. And the
Yeah.
problem is that rates did not go down fast enough, so a lot of people were like underwater in their monthly payment.
Yeah.
So I do think where obviously I use like an internal tool that we use for clients where we look at the interest rate and we're like, what happens if it goes down 0.5? What happens if we? So that's why I'm like very aggressive with our banks and our lenders and for my I'm very because it's really important to get a good rate because it can make a big difference.
Yeah.
But in terms of, I think it makes sense that if you're buying a rental property, I would say it needs to cash flow. A lot of people
Okay.
make the mistake of buying and then hoping it goes up. That is you do not want to be subsidizing your tenants. Like I've got a few
Yeah.
people where like I'm subsidizing my tenant. I literally tell them, I'm like, you're subsidizing your tenant. How do you feel about that? The tenant is, and the tenant is still thinking, they're paying too much because the tenant is
Right,
always
right.
going to think they're paying too much.
Right.
So
Right. They're
I
doing you a
think
favor.
exactly. So I think we're in a really crucial sweet spot. Now, a lot of
Mm,
people know me that I'm very strict with my real estate investments. Like I'm very strict about making sure that you don't overextend yourself, you don't
right.
overbuy. And so right now I think we're in a sweet spot. Even that started pretty much last year where you're starting to see more people come in. Last year it was like a little bit less than usual.
Right.
But right now what you can really do is get the home and the Trump administration is really looking to have someone in the Fed that's going to lower interest rates aggressively. I think that's going to happen. But I would say just make sure, assume that interest rates are not going to go down. Make sure that you can afford it. And then most likely they will. Now, most likely they will. So you'll be able to refinance at a lower rate. And then kind of do something like that around that. But it can make sense for several reasons. Number one, if it's a beautiful home that you love, right? So
Right.
I said, look outside your area, but also don't buy in a town where you hate it and that you feel it's unsafe. Go during the weekend, go during the day, make sure you love it. Sometimes it is worth it. I'm a very big fan, like numbers driven, but
Okay.
if it makes you happy, if buying a home truly makes you happy and you feel like you need to nest, it's you see it as basically a luxury purchase that can help you a little bit, but you only live once, so you also want to make sure that you enjoy your life.
Right.
So I would say you can wait. I think it's just going to get harder, especially as interest
Yeah.
rates come down. So I
I
think
think
this is a
so
good sweet
too.
spot.
Yeah, I try to advise my clients all the time, not to get bogged down with the news about the rates and thinking that the rate is going to come back down to like the 2%, 3%. I'm like, that was an anomaly. There was
Yeah.
a whole pandemic, you know? The only way that that happens again is if we run into another pandemic, and I don't want that. So
I know.
the likelihood of that happening is probably not the thing. So, but the one thing that has been consistent over time is that the prices of homes has continued to increase. You know, we see the little dips and dips, but the dips come as it continues to hike up. So, you know, you want to get in there wherever you can when you're ready. Um, this is one question that I would say hit home for me because,
Yeah,
uh,
good. It's so annoying. I keep getting all these like spam calls.
oh,
I'm
no
like,
worries, no worries. Yeah, I love the do not disturb because it's like, don't even bother me.
yeah, I
uh, But so in terms of having student loan debt, does that automatically disqualify you from home ownership? And I asked this question because I remember very specifically I had when my student loans were in default, which I'm sure almost every American has had this experience. Um, and I had a Navient representative call me and get so indignant with me. She told me, "You will never own a home." And I was like, oh my God. Like, first of all, that
what?
is not something that you should be telling anyone. This is not your money. So being so attached to it is like very weird. But I remember feeling like, oh my God, is she right? Like, will I never own a home? And obviously she was wrong because I was able to purchase my first rental property in 2022. But I just remember thinking, like, oh my God, like I'll never be able to own a home. Like, this is insane, you know? And I'm sure there's other people who have maybe thought that that's the case too. Is that a myth?
It's a total myth. So here's the thing: you don't want to default on your credit cards or mortgage or anything because it dings your credit score, it lowers your
Right.
credit score, and then it makes it harder. However, there are so many people with student loans. I have a lot of clients with student loans
Yeah.
that absolutely own a home, and I tell them, I'm like, you got a very great rate on your student loan. We are not paying more than what you need to every month
I
because we're
heard
going to
that.
take advantage of the free money that the government
Yeah.
gave you. So, no, that is just a myth. And I think, yeah, it's just probably someone had a bad day and had a toxic trait or something. That is, I'm sorry that happened to you. That is
Yeah.
so bad. Like,
So if you're like me, know that just because you have student loan debt does not mean that you could never own a home and have property. It definitely is something that you can have. And I am a testament to that because I had student loan debt and I was able to purchase a home. So, um, and we're kind of getting to the last question here before if there's anyone here that wants to ask questions. What's one financial habit people can start right now this month that will move them closer to home ownership?
fake the mortgage payment. So here's what I'm, so let's just say that you want to buy a home and you're doing the numbers, all the things, right? You're putting the mortgage, interest rate, property taxes, maintenance costs. I like to assume for maintenance and repairs about one, well, you know what a great hack is? Is actually, this is awesome. I'm a big fan of Gemini, or ChatGPT, you can use ChatGPT,
Yeah.
but let's just say that you're looking through Zillow and you like a home. What I would say is copy the entire home, copy it, paste it into ChatGPT or Gemini, be like, create a very detailed monthly budget for this. And it's going to give you
Wow.
the mortgage, kind of like, it's going to be a good way to start. And let's just
Hmm.
say that the monthly payment is like three, four, $5,000 a month or $10,000, which is very, I'm seeing this very commonly now.
Yeah.
$10,000 a month. Okay, you want to start paying for that? Assume, like, put it into a separate account and kind of fake the mortgage before you even own a home. And that's going,
Wow.
not only are you going to save money for repairs and maintenance that way, but it's going to force you into thinking, oh, do I feel comfortable spending 10 grand a month on a home? Or do I
Wow.
feel unhappy and pissed that I'm putting so
Hmm.
much money away for just a home and maybe I wanted something smaller than what I originally thought?
Right.
So yeah, fake the mortgage. That would be my best
Okay.
advice.
So faking the mortgage is basically kind of testing out if what you're wanting is something you can actually really afford and if it feels good to you in putting out that money. But then again, you're it's almost like a forced way of saving. So I love that. I love that idea. Thank you so much for your time. Can you let the people know how they can connect with you and get in contact with you if they are looking for, a great financial planner that can help guide them through this path of home ownership or whatever personal goals they may have?
No, absolutely. So best way you can simply direct message me on Instagram. We have what I call our VIP days as well as like ongoing. So we basically have two types of services. One is where we do a VIP day and we're going to analyze your home, your investments. We're going to clean up your entire financial picture so you're ready to really buy a home and make your realtor and lenders happy. And then the second thing is if you're wanting like a longer term relationship, we also have ongoing services that way. So we offer both, one for you to prep and then the other one for like an ongoing if you're actually like want to see me all the time. So
Perfect. Well, if you're in the chat, if we can please give Sylvia a round of applause, I really appreciate it. Thank you so much for taking the time. Thank you for joining in. Please be sure to tune in again tomorrow. We will be here at 7 p.m. Eastern Standard Time talking with Brian from Cross Country Mortgage. And with all of this great advice we got from Sylvia, we're just going to roll that right into that conversation with an actual lender and talk to them about some of the ways that you can also get back on the path to homeownership. Thank you again, Sylvia. I really appreciate you, and hopefully we can do this again soon.
oh, 100%. Thank you so much, Tiffany. Thank you,
Yes, thank
everybody.
you. Thanks, everyone. Have a good rest of your day. Awesome. Well, thank you again for everyone that joined today. Please be sure you tag this, send someone this live, let them know that we're doing this all week until Thursday, the path to home ownership. We will be looking at once we just talked with a financial planner. Tomorrow we'll be talking with a lender. After that, we'll be talking with a realtor broker, VP, so they can talk to you about the process of finding the right representation. And then after that, we'll be talking with a title agent that talks about the closing process of homeownership. So I am so excited. Thank you again, Sylvia. This was such a great time, and I hope to see you tomorrow.